Good morning. Welcome to the APN Industria REIT Snapshot. I am pleased to report another year of progress and success, with funds from operations increasing 3.8% to 19.2 cents per security. This is towards the top of the 3 to 5 to 4% guidance band provided in May, and significantly higher than the 2 to 3% guidance provided 12 months ago. There are a number of highlights for the year that I'll touch on, with the first being the addition of 7 warehouses to our portfolio throughout the year. The properties were acquired on an average yield of 6.6% and are underpinned by a weighted average lease expiry of 4.9 years. We funded 4 properties with a $50 million equity raise, which was upsized to meet demand from both retail and institutional investors. The success of the equity raise has resulted in us reporting gearing at 30%, 1% lower than 12 months ago, and the bottom of our target 30 to 40% band, providing us with scope to deploy capital quickly when attractive opportunities arise in the future. Around the same time as the equity raise, we also refinanced $46 million of debt, increased our facility limits by $30 million, and diversified our sources of debt by introducing a new lender into our financing syndicate. As a result of these actions, our weighted average debt maturity has increased to 3.2 years, and our next refinancing event isn't until December 2020. Our leasing activity was once again strong, with a record 53 transactions being completed across 13,700 square metres, including 6,800 square metres at Brisbane Technology Park. Leasing is our bread and butter and our number one focus, as it generates cash and underpins income for future periods, which ultimately funds the distribution. For this reason, we will continue to refine and adapt our approach to exceeding the expectations of our clients and providing a value proposition that includes improving amenity and delivering efficiencies that can reduce their operational costs. Our investment in solar continued throughout the year, and we now have 1.8 megawatts of installed capacity across the portfolio. This includes 180 kilowatts at Rhodes and over 1 megawatt at Brisbane Technology Park, where we are generating a return on cost exceeding 15%, whilst also reducing our carbon emissions by over 700 tonnes. During the daylight hours, an average of 52% of building energy consumption is powered by solar, and as our awareness of energy generation increases, we're having more conversations and becoming more in tune with what our clients value. And it's fair to say that some certainly do value a landlord that invests in their buildings, and particularly where that investment reduces reliance on the grid and carbon emissions. Valuations were completed across 53% of the portfolio and resulted in a $16.4 million increase over prior valuations. The majority of the uplift was at Brisbane Technology Park, largely following the activity I highlighted above, and there is opportunity to drive further valuation growth in the coming periods with consistent tenant retention and occupancy outcomes. The weighted average cap rate for the portfolio is now 6.5%, and the WALE is 6.1 years. Our net tangible assets was $2.71 per security as at 30 June, as the valuation uplifts were largely offset by fair value adjustments to our interest rate swaps and acquisition costs. The actions and outcomes throughout this year position us well moving forward. Our revenue is generated from rents that are largely fixed and growing, with more than 80% of leases having 3% reviews or more. The gearing is low at 30%, and we have good visibility of earnings, with only 6% of income expiring in FY20 once we take into consideration renewals that we have already agreed. The board has approved full year FFO guidance of 19.7 to 19.8 cents per security, representing 2.5 to 3% growth over FY19. And there are opportunities to outperform this guidance throughout the year through leasing or the deployment of capital. We're also guiding to a distribution of 17.5 cents or 3% growth, and the distribution will continue to be paid quarterly. Naturally, our guidance is subject to current market conditions continuing and no unforeseen events. My contact information is outlined below should you wish to discuss your investment in APN Industria REIT. Thanks for your interest, and I look forward to updating you again in 6 months.